Hey, what's up, everybody? Andrew here. In today's video, we're talking about the Volatility Lab in Interactive Brokers Trader Workstation. Let's get into it. So from your main portfolio here, you want to go and open up a Volatility Lab. You would go to New Window. You would go down, either scroll down all the way to Options Tools, and then you want to go to Advanced Options Tools and click on Volatility Lab. Conversely, you could also just search in the top here, Volatility Lab, Volatility, and it'll pop up there. You want to click that. It'll open up in a new window and look something like this. So what we actually want to do with the Volatility Lab is actually scan for different products, companies, stocks, and just actually see how the volatility kind of compares at different times historically versus whether that's now, where it's headed in the future, to potentially give us an edge and understand where the kind of the action of the trading or the price of the stock may go. So I'm going to go ahead and click on the top here and check out a different company. If you want to click on one that's already there, pre-populated, or you can just type your own. I'm going to look at Tesla just because I want to see a company like itself that's somewhat volatile, and we will go from there. So when looking at this data in this chart here, I like to look at a different way than what's currently shown. So I like to customize a little bit. And I like to go from 2 months out to a year. And I also like to show this little gear icon and switch from implied volatility to historical volatility. And this will change our chart a little bit. Let me blow this up for you. So this chart is now, it's showing us implied volatility for the past year for Tesla by the white line. It's got the pricing in the gray at the back right there. You can see it kind of moving up and down. And you can also see the historical volatility plotted there in orange. Now, what I like to do when I'm looking at volatility in this lab, and I mainly just use this screen. I don't usually use everything else that comes with it. There's other stuff here that we can dissect in a second, but I usually just use this big screen and I run through my list of companies. So I might have 10 companies kind of saved in here in the watch list. And what I'm going to do is I'm just looking for different kind of times when the volatility spreads get so wide that it's likely that an implied move is coming, which means the stock's either going to move up or down significantly. And I can take advantage of that as a trader and make my assumption on which way I think it's going to break. So what I'm seeing here for Tesla is that we just had a period of an extreme drawdown, which has led to a spike in our implied volatility or our current volatility of the stock. We see this here. The implied volatility has spiked up away from the historical, and that has led to, that was because of a price sell-off in Tesla stock along with the rest of the market. But the stock price sold off, the implied volatility shot up, because when you think of volatility, it's basically, it's uncertainty and it's risk. That's what it's kind of representing. So as the stock keeps selling and selling, the implied risk or fear around that stock, because it's dropping, starts to increase. And we see that on the chart as it reaching up like that. And now we also see that the historical volatility is also skewing upwards, which means that around this time of kind of the year, because Tesla has earnings coming up this week, the implied volatility and historical volatility generally kind of trend upwards, because earnings is one of those events that can impact the stock greatly in terms of price movement. It doesn't actually impact the stock day to day, except for the revenue numbers and for the kind of the productivity of the company. But what the implied volatility is showing us is that there's more extra juice kind of in the stock right now. And as an options trader like me, if I'm going to sell options contracts or potentially sell a covered call, I don't usually buy options, but if I was going to sell them, it means that as a seller of put options, I'm going to get paid more for selling my puts and potentially covered calls. And if you were to buy your call options or buy your puts, you're going to have to pay a little bit more because there's more added volatility in the system right now. With that being said, we can also see here from a price point, we can do a little bit of technical analysis on our price points. We see a couple of little areas here at the 250 mark. That was double tested, triple tested here, and almost kind of held on here, but broke through. You see that there's been 1, 2, 3, 4, almost 4 kind of times around that 200 mark has been tested as well. So that's a significant area of support as well. And in my estimation here, this is kind of gearing up for, if earnings report is good or just adequate, I think the Tesla stock will pop a little bit after earnings, just given that this price has been driven down so high and that the volatility, these lines usually come together. The orange and the white usually they come together for a lot of times. When you see the kind of this displacement, it's when a large price movement happens in one direction or another, either upwards or downwards. So what I'm thinking is that we have an increase in volatility, we have a decrease in the stock price. I'm thinking that the stock price is going to actually level off and raise after earnings if they are good, and this volatility kind of settle back in. Those lines will kind of meet themselves together. What else can you see though when you're looking at this volatility here? If we put that back in, we can see one other thing here that I like to look at is the actual open interest of the stock. And as an options trader, again, you want to understand where the action is happening, because it can identify different kind of trigger price points where the stock may get hung up on, may not pass through. So what this chart here is looking at is open interest. And again, we'll make sure that we're just looking at Tesla here at the top. And we are now, so we're looking at the open interest, which is just the amount of actual contracts that are out and actually in the market right now that have been bought or sold for puts and calls for October, November, and December. And you can see the bigger the number on the graph, the more combined open interest there is. So right now, the two kind of price points or three price points that I'm seeing that there's a lot of kind of action surrounding is 250, obviously 300, and down here probably so 200. So there's kind of the big ones, and you have here 260 as well. Given that the stock price is currently floating around at 220, we can kind of have an idea that this number here at 250 is probably the high end of what's going to happen if the price was to kind of get through and kind of push up during earnings season here. 250 is probably an area where it's not going to go above, just because there's so much open interest around there, which means there's so many winners and losers that are kind of on either side of the 250 that will profit if it does stay below. So it's kind of like a trigger point there where it's going to get caught up. If we want to go one level further and actually take some of this data off to kind of make it a little bit shorter time frame, we can actually take December and November off. We can see then that the 250 is the big one, and 240 here as well are the kind of the big numbers. So if there is a good earnings report for Tesla, I would expect it to kind of catch at these points of 240, 250 and not break above 250, just because the open interest is showing that as a major sign of support and resistance. A lot of battling going on, a lot of buying and selling going on at that actual interest point. On the flip side, 200 could catch, and then we're going to look down to 180, 190. So the big round numbers are kind of the de facto kind of catch points, just because they're round even numbers. It's a kind of a human bias that people like to see the big round numbers. If we go back and add these back in, we can also change from open interest to option volume, and you can see at which strike points again have the highest option volume. So when you're scanning through your kind of your stocks and you're looking at different things, make sure you open up the Volatility Lab once in a while and just see where the implied volatility is at versus historical volatility. What this means, again, if you're going into your options chain, and we're going to just switch gears here a little bit, we're going to go and see that if you just move this over, when you're going into your options chain for Tesla, you might only be making like a 1 or 2% return based on your inputs and what you're trading. But if we go over here, we can see that the IV is 95 right now. If you go next week, we can see that it drops down significantly to 78%, and it'll continue to drop as we move out in time, which is actually backwards to what usually happens with volatility. Around earnings season, it gets heightened, which means that there is a backwardation in implied volatility right now. And as you go out in time, volatility is supposed to increase because there's more time to work in an options contract. Right now, we're seeing the reverse because there's so much uncertainty around earnings this week that the volatility is spiked here at 95%. So there's a lot of money in the market right now for actual Tesla puts and calls. And if I was a option seller, usually I stick to a delta of around 25, and I want to make sure I'm getting a 1% return to my trade, which is just taking the strike price and dividing it by the bid and ask. And that right there, the 420 at the 25, 26% delta, that would require me to get like a 2% win on this trade. So that's something I might kind of jump into depending on the technical analysis, depending on everything else. But this is just helping you guys kind of find volatility in the market and looking at the Volatility Lab and how you can use that to your advantage. If you want to look at something else in the Volatility Lab, look at Apple, let's say, a less kind of volatile stock. It's got the same kind of setup though. We pop this open. It is also showing a steep decline with a rising IV and a rising HV because earnings are coming down the pipe again. But the similar kind of thing, you're looking for kind of catch points here in the stock price and looking at what happens generally when the stock price kind of differs, or when the IV and the HV kind of pull apart. What does the stock price do? You're trying to look at kind of seeing patterns in the IV and knowing when it's elevated. And as an options trader, when you can actually go in and get things cheaper at a discount and make a better return on your profit for your trading. So hope you guys enjoyed that video for the Volatility Lab. If you want to learn how to actually scan volatility on your actual kind of watch list, what you're looking at your companies, make sure you check out this video right here and subscribe and like the channel if you got some value today. Thanks for watching. I'll see you guys on the next one.